Good morning. Today's presentation will be on GASB 87 information update and for the upcoming implementation and expectations for New York State reporting entities' roles for GASB 87 going forward. Slides will be presented by myself, Corey Nicholas, and Peter Saloni. Everyone should be muted and video should be off for all attendees by default. This presentation is being recorded and will be posted on the OSC webpage in case you would like to revisit a topic we discuss. During the presentation, if you have a question, please put the question in the Q&A box. Questions will be answered at the end of the presentation or individually offline. Alrighty, so the current standing of the GASB 87 timeline is the implementation of policies and procedures for the 4/1/22 adoption date of the standard. We have completed the three major marked steps on the timeline thanks to New York State reporting entity submissions and correspondence. Those steps being the initial agreement inventory submissions that allowed us to build a 2/1/21 lease inventory, the reviews of New York State reporting entity submissions and contracts, and the discussions and determination of our set materiality threshold. Before we go further, I wanted to make note when I say New York State reporting entity in this presentation, I am referring to any entity within New York State government whose results and impacts of financial and operational activities are required to be reported in the state's financial statements as required or defined by the Governmental Accounting Standards Board. So today's agenda will begin with an overview of the project importance and a quick GASB 87 refresher. Next, we will go over the results from our analysis of New York State reporting entities, both the information on the 2/1/21 lease population and also determinations made on a materiality threshold. Lastly, we will discuss the expectations for New York State reporting entities for the 2/1/21 lease inventory population that we have, the 2/1/21 to 12/31/21 population, and for the set quarterly process that we will begin starting 1/1/22. We will be explaining the expectations for New York State reporting entities, reasonably certain determinations for lease agreements, and expectations for recording and submitting lease inventory data on the LeaseController template. So this has been a big project so far, and we thank you for providing the inventory toolkits and helping with correspondence when we reached out. This project is incredibly important because ultimately New York State has to issue debt and fund all New York State agency operations. The cost of that debt, the interest rate, is gauged on how risky financially New York State is. Annually, the New York State Comptroller is required to compile financial statements. Peter and I both work in the Bureau of Financial Reporting, known as BFR, that is responsible for putting together all the financial statements for New York State. These financial statements are audited to determine their conformity to GAAP. Based upon the data in the financial statements as well as the audit opinion, credit rating agencies will make determinations on the riskiness of New York State debt. With the importance of implementing and accounting for GASB 87 leases, we wanted to give a brief refresher. So, under GASB 87, a lease is defined as a contract that conveys control of the right to use another entity's non-financial asset as specified in the contract for a period of time in an exchange or exchange-like transaction. Make sure to focus on the details and substance of the contract. It is important to examine each agreement to make sure it meets the definition of the standard. A contract, at the beginning of this definition, means any purchase order, legally binding agreement, or any legally enforceable right. For applicable lease agreements, there needs to be tangible property involved. Also, at the end of the definition, exchange-like means rent or payments in the agreement need to be more than $1. There needs to be substance traded. It is also important that control over the asset is obtained for the GASB standard applicability. And lastly, keep your eye out for any embedded leases in other contracts and agreements that could apply under the GASB 87 standard. A quick example of that is renting and having control of servers in a contract for software. So just keep your eyes out for anything that may be hidden in a contract with other purposes. So last slide, I mentioned tangible property being required for GASB 87. Applicable and included GASB 87 examples on this slide include properties such as structures or lease space, equipment, vehicles, servers, and other tangible assets such as printers, copiers, and water coolers. It is important to note that all these items are always subject to materiality and the agreement details. Items not included under the standard are short-term leases with a maximum possible term of 12 months or less, leases that transfer ownership, leases of intangible assets, leases of biological assets, leases of inventory, and supply contracts such as an agreement to purchase power. Just to note, biological assets are something like animals or timber. They are always excluded from GASB 87. So the next two slides will be covering the outcome of the 2/1/21 submissions of toolkits and New York State entity reviews conducted by our office. For our 2/1/21 inventory, there were a total of 1,025 total GASB 87 applicable leases found. 179 of those are revenue leases with a New York State entity receiving money. 315 are OGS managed and are maintained in SFS. And leases that are not managed by OGS and are above the new materiality threshold will be maintained in LeaseController, our third-party software solution. Originally, during reporting tool submissions, the threshold was set at $20,000 annually. After compiling and reviewing our initial lease population for 2/1/21, we established two materiality thresholds to be used going forward. For leases that commenced before 2/1/21, the materiality threshold has been set at $300,000 annual exchange of value for the lease agreement, otherwise known as AEV. For leases that commenced after 2/1/21 and all future leases, the materiality threshold has been set at $100,000 AEV. AEV can be computed by taking the sum of all payments required under the agreement for the use of the asset divided by the number of months the lessee has the right to use the asset during the period the agreement is reasonably certain to be in effect, and multiplying that by 12. You can also find a definition and the computation in our GFO Guide to Financial Operations on our website. These new thresholds will be used for all leases maintained in LeaseController. All leases that are maintained in SFS will be accounted for regardless of the lease agreement dollar amount. So now we will go over the policies and procedures and also the expectations for New York State reporting entities going forward. So there's a lot of text on this slide. Bear with me, and I'm going to try and break it down. Think of it as three different steps for expectations for New York State reporting entities. So the first step being BFR, as I said, has compiled a lease population for New York State through 2/1/21, which was broken out a few slides ago. We will be sending a lease inventory report to each New York State reporting entity by the end of January to verify there are no missing leases over the $300,000 AEV threshold for the current population we have. To be included with that, we expect New York State reporting entities in this step to complete the LeaseController template for the 2/1/21 inventory to provide BFR, our office, with accurate lease data, that being term, amount, reasonably certain determination, etc. This step will be due March 1st, 2022. And if you have any questions on any of these steps, please reach out. So that's the first step. Step 2 is New York State reporting entities will complete the LeaseController templates necessary for their 2/1/21 to 12/31/21 lease inventory to get an accurate inventory for the end of the calendar year over $100,000 AEV, and submit this population to BFR also by March 1st, 2022. Steps 1 and 2 will provide BFR with a completed lease inventory through 12/31/21 and allow New York State reporting entities to begin their quarterly process, which will be expanded on in a second in step 3. So for step 3, this will be repeated every quarter. For the quarter beginning 1/1/22, BFR will send quarterly reports at the end of the quarter to each New York State reporting entity to display its lease inventory. New York State reporting entities will be expected to provide their newly commenced leases for the period, modifications to existing leases, and any missed leases for prior periods to BFR using the LeaseController templates. New York State reporting entities will be required to submit their templates by 30 days after the end of the quarter. So it's probably beneficial to have it and work on it as you go. An example of the due date would be for the quarter 1/1/22 to 3/31/22. That template would be due April 30, 22. So now I will pass the presentation to Peter, who will discuss discount rate.
Thank you, Corey. Previous to GASB 87, most leases were treated as operating leases, and rental payments were shown as expenses on the Statement of Revenues and Expenditures. One of the key impacts of the implementation of GASB 87 is that most leases will now be reflected on the balance sheet, subject to materiality thresholds. In order to calculate the present value of future lease payments included in these balance sheet items, information must be extracted from leases, including lease terms, lease payments, as well as a discount rate. One of the questions in the LeaseController template will ask you for an implicit discount rate if it is stated in the contract. In our experience, an implicit rate is rarely included in a contract, but it's something we wanted you to keep an eye open for. If the implicit rate is not included in the contract, LeaseController and SFS will use the incremental borrowing rate for present value calculations. Reasonably certain is a concept that many of you should be familiar with, but we want to reiterate the importance of it when determining the lease term and related rental payments. For leases reportable under GASB 87, the lease term isn't always just the term stated in the contract. There may be multiple options and clauses that must be identified and assessed as if they are reasonably certain to be exercised. If a clause is reasonably certain to be exercised, it will affect how the related lease term and payments associated with the lease are determined. So GASB 87 states that it requires all clauses and options with a financial impact to be evaluated for whether the clauses or options are reasonably certain to occur. Reasonably certain is defined as a high threshold of probability that must be met to include optional lessee payments in the measurement of lease agreements and lease liabilities. The lessee or the lessor must have a compelling economic reason to exercise the option or not exercise the option. All economic factors relevant to the assessment must be considered. I'll touch on some of these economic factors listed and provide some examples. Significant economic incentives, market rates. Say you have a renewal option in the lease and the rental payment and the option are lower than the current market rates, and you intend to stay in the building. Based on that, you'll be reasonably certain that you will exercise this renewal option. Condition of the asset. You may be leasing a piece of equipment that is well past its useful life. When the current lease term is up, you'll be looking to upgrade. In that case, you're reasonably certain that you're not going to exercise any renewal options. History of exercising options to extend or terminate. Let's say you've been leasing a building for the last 20 years and there's a renewal clause in the lease for an additional 10 years. You see no reason why you would leave the building. In this case, you're reasonably certain that you will exercise the 10-year renewal option stated in the lease. Here are some common contract options you may encounter and be required to make a reasonably certain determination. Renewal clause. These are periods in a lease agreement that extend the lease beyond the initial lease period. Termination clause. A clause in the lease agreement that allows termination by either the lessee or the lessor or both. Purchase option. A clause in the lease agreement that allows the lessee the option to purchase the asset. Residual value guarantees. A clause in the lease agreement that requires an additional payment at the end of the lease term based on the condition of the asset. Fiscal funding. A clause in the agreement that would allow governmental lessees to cancel a lease if the government does not appropriate funds for these lease payments. The lease controller template will walk you through these options, and if they are included in your lease, and you're reasonably certain to exercise any of them, it will ask you for the additional lease terms and rental payments, which will be included in the calculation. The most common of these options are the renewal and termination clauses. We'll go into a little more detail for these two specific ones. Renewal periods. If the lessee or the lessor has the ability to renew the lease, you are required to determine if it is reasonably certain if the renewal options will be executed. If there are multiple renewal periods, each period must be annualized. Renewal periods that are reasonably certain to be exercised are added to the lease term. Termination options. If the lessee or the lessor has the ability to terminate the lease after a certain period, then that party must determine if it is reasonably certain that the option will not be executed. If both the lessee and the lessor have termination options, these periods are excluded from GASB 87 reporting. So for the second bullet point, I just want to provide an example where this may come into play. Let's just say, an agency enters into a 5-year lease, and during the 5 years, during year 5, they start negotiating with the landlord with the intention of modifying the lease or creating a new lease to extend the lease term an additional 5 years. With the original lease termination date approaching and negotiations still ongoing, the lessee and the lessor enter into a month-to-month lease where each party has an option to terminate. This month-to-month lease, commonly known as a holdover lease, would not be reportable under GASB 87 for 2 reasons. The fact that both parties have an option to terminate, and the fact that this is considered a short-term lease because it is less than a year. When negotiations are complete and a new 5-year lease term is entered, then it is treated as a new lease and now reportable under GASB 87. This slide just shows a visual tool that can be used to determine the lease term with the renewal and termination clauses. You start with your non-cancelable lease period. If you are a lessee, you add any optional renewal period if the lessee is reasonably certain to exercise that renewal period, plus any periods after an optional termination date if the lessee is reasonably certain not to exercise that option. And the same goes for the lessor. Starts with a non-cancelable lease period, and you add any optional period to extend if the lessor is reasonably certain to exercise, and add any periods after an optional termination date if the lessor is reasonably certain not to exercise that option. As a general rule for all of these options and clauses, you should avoid the temptation to make a reasonably certain determination that will make your analysis simpler. Each option or clause for each lease must be determined independently. The implementation of GASB 87 will be a large focus of auditors of our financial statements, so properly determining the lease term is critical, as these determinations will have significant impact on what is recorded. Errors could lead to internal control findings or modified audit opinions, so the consistency of reporting amongst agencies is very important. Now we'll go over the LeaseController software and the upload template. LeaseController is a third-party software developed by Deloitte to record and store lease data and assist BFR in recording the necessary accounting entries to comply with GASB 87 for quarterly and annual financial reports. It's a web-based platform where agencies will complete Excel templates and email them to BFR. BFR will then upload the templates and calculate the appropriate accounting entries based off of your inputted values. All leases over the materiality threshold that are not OGS managed will be added to LeaseController quarterly. If you recall on last year's inventory reporting toolkits that you provided us, there was a column that asked if the lease was OGS managed. If you replied yes, those leases should not be reflected on any LeaseController template you provide us. They will be inputted directly into SFS by OGS. If you have any questions as If you have any questions as to any current lease or any future leases managed by OGS, reach out to us and we can provide you with an answer. We are currently working with Deloitte on a New York State tailored template. When the final template is released by Deloitte, we will let agencies know that is available on our website. Shown here is a portion of the lease controller template for a lessee. There'll be 3 different types of templates that will be provided. One for when the agency is a lessee, one for when the agency is a lessor, and one for any material lease modifications that may occur to a current lease. In these templates, you'll be asked a series of questions about the lease, including general information, lease terms, and rental payments, and asked to make a reasonably certain determination on any options or clauses that are included in the lease. This is a screenshot of the payment tab located in the lease controller template. This is where you will be asked to provide the lease payments for each lease. As you can see from this example, the first 5 years of the lease, the monthly lease payments are $1,000. And for the second 5 years of the lease term, the monthly lease payment increases to $2,000 per month. As referenced in prior trainings, the monthly payments should only include what are considered lease components, which are rental payments for the specific use of the property or the asset. Providing utilities and common area maintenance are considered non-lease components and should not be included in the monthly payment total. These are treated as expenditures and not included in the calculation of the balance sheet items. BFR will be holding working sessions on completing the template and answering any agency questions. We plan on holding our first working session next Wednesday, January 19th at 10 a.m. An invite will be emailed and the dates and times of the other working sessions are reflected on the OSC website. So just to reiterate what Corey mentioned earlier, what is required for the agencies on these lease controller templates and when are they required? Again, BFR will email agencies a list of leases over 300,000 AEV that were included in the lease population as of February 1st, 2021. Agencies will fill out the lease controller template and submit it by March 1st, 2022. Then agencies are required to complete the templates for leases that are over the 100,000 AEV that commenced between February 1st, 2021 through December 31st, 2021, and submit by March 1st, 2022. And thirdly, agencies will be required to complete the template quarterly for leases above 100,000 AEV, starting with the quarter ending March 31st, 2022. Even if you're an agency who did not provide a reporting toolkit last year because there were no reportable leases, it is still the agency's responsibility to review their records quarterly and provide a template if a lease commences in that quarter. That ends the presentation portion of our training. Just want to go over some things. Just keep in mind, located on our OSC webpage, you can find all of our prior trainings that go into detail about GASB 87 reporting, as well as the Guide to Financial Operations that provide policies, procedures related to GASB 87. As I mentioned, we'll have 4 working sessions over the next 4 Wednesdays at 10 a.m. The first of which will go over the lease controller template and any related questions. If you would like us to discuss any specific topics in future work sessions or have any agency-specific questions, please send an email to the FinRep inbox. So we'll just going to check the question and answer box, see if there's any questions that we can answer here. If not, we'll take it offline. So the first question, should copier maintenance agreements be included? If so, what is the threshold? So as I mentioned, what's that?
I can take that if you want, Peter.
Yeah, as I mentioned, copier maintenance is considered a non-lease component. So when you're considering what's included in a lease payment that will be included in the calculation for GASB 87, it should just be the rental payments. Sometimes you'll see leases that have, monthly common area expenses or monthly maintenance expenses, or in this case, you may be renting the copier. So the cost of renting the copier would be including in the calculation, but the cost of a maintenance person coming in, monthly or when needed, that would not be included. That would be considered a normal expense and put on the income statement as opposed to the balance sheet.
So there is one exception. The only way it would be included is if you can't break it out from the lease payments itself, which is rare, but just keep an eye out.
Yeah, that's good point. So if you have you're renting the copier for $1,000 and included in that amount is they'll give you unlimited service, and you don't have a reasonable way of determining what that service costs, then you would include the $1,000 in the calculation. But if the lease said $1,000 for the rental and $100 for the maintenance, you would only include the $1,000 in the calculation.
We have a question. Can this presentation be sent via email to all participants? Shortly after concluding here, I'm hoping in the next couple of days, we will have the recording of this on our website, which the email to that was sent in, I believe, the first or second email for this event. So check back there for that. If you don't see it, let us know.
Then I see a question on.
There's one on standard lease of space that OGS manages. Anything OGS manages, they will report their managed leases through SFS, so those won't apply for the lease controller portion. Yeah, for what we need provided on templates is the non-OGS managed leases to be inputted in lease controller.
Then I see a question, will there be any additional reporting requirements related to GASB 94 and 96 in the upcoming months? There will be. We are concentrating on GASB 87 because the implementation date is 4/1/2022, where the implementation date for 94 and 96 is the following year. So we will, during 22, have additional info and trainings on GASB 94 and 96.
We had a mention as well that it appears the link to the lease controller template isn't on the web page. I believe that's coming in the near future too. We will look into that as well. A reminder, we plan on going over that template in next Wednesday's work session as well, if you'd like exposure or have any questions on it.
One question which kind of goes along the lines of what's considered a lease payment and what's a non-lease payment. With regard to leasing monthly payments for template, is it just the amount for rent, or will we include other things such as electric, parking, and maintenance? So that's a good point. Not, as I spoke previously, electric and maintenance would not be included, but parking and renting any storage units would be considered rental because you're renting a physical space. The maintenance and the common area expenses are more of you're paying for a service. But if you're renting a building and within that contract you're renting a parking spaces or a parking garage, or you have a storage space, off-site, those would be included because you are renting a physical space and it's not providing a service. Since SFS is not tracking revenue contracts, will they all be entered into spreadsheets for inclusion into the reporting software? Yes. So that's where the agency is the lessor, which that would be a revenue contract. Those would be we would ask you to include those on the lease controller contract, on the lease controller template for specifically when the agency is a lessor, and those will be reported into the lease controller template.
So I think there's a couple questions with a similar target. So you'll be reporting on the rent payments for the contract, anything that's broken out like maintenance will not, or electricity will not be added. If you can't break it out from the payments for the contract, though, that is the only exception to that, and it'll be included.
Are the thresholds the same for revenue and expense leases? The threshold we'll send you a for the February 1st population, we'll send you a list of the revenue leases, and for the leases from after 2/1/21 and going forward, the threshold will be 100,000 AEV, similar to the expense leases.
Since the question for since SFS is not tracking revenue contracts, that is correct. Will they be entered into spreadsheets for inclusion for the lease controller? The answer to that is yes, they will. They'll have their own separate template. It'll be very, very similar to the one for expense leases. So for the template, and we'll get into this more in the working session next week. For the template, it's going to ask you to include the rent in a different Excel tab, as Peter had a screenshot of. And that'll just be the rent payments and anything else applicable. That you will not include on the template the maintenance or anything that doesn't apply. So it does break it out too a little bit on the template to help, and we can go over that more next week.
Rental of PO boxes. That's a good question, but I would assume it would not be over the materiality of 100,000 AEV. But we'll look into that. We'll look into that question. So we have all the questions here, and we'll print them out and review them if we haven't gotten to your question. And we'll either send an email out with answers to the ones we haven't responded to, or provide an FAQ on the website. But as we said, this is an ongoing process, and we hope these working sessions will help everyone, start getting started on the project, and then be able to answer any questions that they have as we go. And again, the FinRep GASB inbox. If you have any questions specific to your agency or anything off the top of your head, let us know. You don't have to wait for the working sessions to ask the questions, and it'll actually give us, rack our brains to what we may want to come up with in the working sessions, because the question you have is probably a question that 20 other people may have. So, Corey, is there anything else you want to go over?
Next week, we'll plan on going over the lease controller template. So come with any questions of that, or at least get exposure. And then weeks after that for the work sessions, as Peter mentioned earlier, we will be answering any questions that you have, or if we get any emails in the FinRep GASB inbox, we'll be going over them in work sessions as well.
So this concludes our training. Thank you for it's a project that has been going on for a couple of years, and it's going to be ongoing. So we appreciate the time and the interest and all the data you guys have given us so far. And we're hoping to streamline this process where it will be a quarterly ask of agencies, but hopefully it will go smoothly, and it won't take up too much of your time. So again, thank you for joining us today, and we will see you hopefully at the next work sessions over the next few weeks. Thank you.